Alright, so here we go. Guys, this is part of the new course and some really cool information I wanted to give you guys. This is a hanging man candle. Hanging man. It is what it sounds like and it is what it looks like and all that stuff. Hanging man. Okay? This basically indicates a reversal of a stock that came down and is starting to go back up again. Does that make sense? So if you zoom in right here, this is a stock coming down and it will produce, several of these like that. And the stock goes back up once these are placed in, and the stock creates a higher low on this side. So this low is not as low as this low. So there's your first, we'll call it HL, higher low. So this is a very important thing to look for. It's not an end-all be-all. It's just like another piece to the overall puzzle that I'm trying to teach you guys. This is super important, so keep this in mind. I'm going to show you some examples on the chart in the next video. Number 2, we have what's called a bullish engulfing candle. So this can come when a stock like gaps up, like that. It can come when a stock has a nice sideways movement. It can create like a big candle here. But either way, when this candle is formed, the next thing you want to look for is one of two things will happen. Number 1, the stock will immediately the next day open up, maybe dip down a little bit and just go up and form another massive candle. That's the first thing. The second thing that usually happens is what's called the inside day. The inside day is where the stock at the open looks like it's getting ready to take off and it starts to tank. Okay, the stock tanks like that. And you have one chance right there to catch it for a bounce. But besides that, let's keep going. It comes back down. Maybe it drips down like that. Okay, maybe it comes down. Whatever, it closes the day like that. So what kind of candle did that form? Well, if that was the open and this was the close, and that was the low of the day, and that's the high of the day, the next candle will look like this. So the candle inside, if you come down here, would look like this. It would be a red candle, and it would have a little wick representing this dip down here, because that's as low as the stock went, and it would be red. So that candle will be red. After that candle, so you've got a bullish engulfing and then an inside day. After that candle, the stock typically will start to move its way back up over the next couple days. Alright, now again, go back to the same rules, the 7 core principles that I talk about, where you have uptrending, non-biotech, all those things that I teach, non-Chinese, 1-year uptrend, roller coaster patterns, low outstanding shares, etc., right? So this right here is just an extension of that. So basically as the stock is, moving in the direction that you want it and it's the stock you like and it puts in a big move, typically it'll follow through on that move or it will give you a nice pullback for a quick trade and then a continuation over the next couple days, not weeks. So this is a really powerful tool to add to your toolbox of trading tools. So the other thing is you've got another candle that I like looking for. So I guess I wouldn't call it a candle, but like a pattern. But basically, like if you ever see a stock spike like that, this is one day. So if you see a stock spike and quickly fall back down to the base of where it took off, then that candle, that's the open, that's the close, that's the high, and that's the low. Right there. Right? So that candle, when they do that intraday, this is really bad. You don't want that to happen because if it's coming back down to where it started like that, it means the next day it's going to go lower. So what would that candle look like? So if it opened here, you start the candle body there, and it closed here, like that, then this would be the wick. So that is the opposite of a hanging man. That's a hammer. Like that's a reverse hammer. So that's a reversal candle, and it's called a hammer. But that's what the day would look like. It rallies up in tanks all the way back down to the beginning. This candle could be green or red. Don't worry about the colors as much as you do just seeing the price action, because this is telling you I couldn't keep the rally, and I came all the way back to where I started. So that makes it very weak. And usually the stock will go back down the way it came. Now, if you want to simplify this without looking at any candles, and we just look at a 1 day period right here. And let's say this is 3 different examples like this. Okay, you rally up, boom, it just keeps going up. Well, what's that mean? It means it's strong. Here was the open, here's the close, here's the low, here's the high. So that candle, would look like the one I was telling you. Does that make sense? Like, that is very strong because it rallied all day. Okay, what if it rallies in the morning, and then comes back to here? Well, that's still kind of going up. So what would that candle look like? Well, here's the open, here's the close, here's the wick right there, because you had that big old high. But see, that's starting to look a little weaker because it couldn't hold that rally. It doesn't mean that it's going to go down. It just couldn't hold above this rally. But as long as this bad boy's in an uptrend, you got to take this with a grain of salt and see what it'll do the next day, because maybe it rallies like this the next day and clears back over that old high from the day before, comes back down, and then goes even higher. All right, so the idea is don't just take one of these things. You got to look at the whole big picture. So what if a stock goes like this? Boom, rallies, and then just dribbles all day long like that. That's not good because it came all the way back down to the base. So it's just looking at the price action, but you can see it in a candle. Instead of having to look at each day, you can look at the candle and go, oh, that looks really strong. Like if that's a green candle and that's all green, that's really, really bullish. If this is green or red, it really doesn't matter. It's just showing you that price action didn't know what to do. Whenever you see like a doji, which is like that, next to a big candle like that, and then another one like that, that just means indecision. So it doesn't know what to do before and after the move. What if the next day it's right here? It's starting to decide that it wants to go up. What if it breaks this high and does this right here? That's really strong. You see, because it moved. So we know that that's a strong move. So now we can look for an inside day, and then we can look for maybe another continuation. So it leads you into like what's happening. If you see, you see a little hanging man right here, and the next day you see a little indecision. Okay, and then what does that tell you? It tells you it doesn't know yet what it wants to do. What if it goes like this? Well, that low's still not as low as that low. What if it starts to go back up like that the next day? That means that it's starting to go up, so maybe it's time to get in. What if it does this the next day? Look for an inside day. And then, boom, continues higher. Because now, the trend is turning, and the candles are telling you what to do. So it's pretty cool, right? Like, does that kind of make sense? Like you just go day by day, you don't assume anything, and you want to basically let the chart tell you what to do. So if you know what to expect after an inside day, that there may be a down day or up day, then you're ready for the up day, but if it goes down, you're ready for that too. So this is a really cool way of like walking through a trade step by step, candle by candle, in order to be able to learn what to do. So I'll try to show you some examples of that on the next video.
Yes, isn't this cool? You are about to learn about candlesticks. That is really neat stuff. And here's why. Candlesticks make trading predictable. Okay? Little inside days and the continuation. Remember how I was talking to you about that? So what I want to show you is those patterns. You've also got the hanging mans that appear at the bottom. I want to continue that talk right now real quick. And you should be just like, Ben, this is awesome. I can't wait to tell my friends about this. And guys, just get super pumped because this is where you start to learn how to piece everything together. So the first thing is scanning for stocks. The second thing is looking at those patterns and recognizing what works. And the third thing is that price action trading, and we're going to use candlesticks. Now, there's like basically 10 different patterns that I use and 20 different candlesticks. So I can teach you so many more things that actually work. But if you just apply these 3 little principles, I would bet you your trading goes from 0 to hero pretty quick. Now, again, in the other stuff that I'm teaching, I've got like a free webinar that I give you guys that you can pay for if you love. I've got another coaching program that is online in a boot camp, kind of like full immersion program, which is amazing. And then I have like this mentoring program where I get to work with you one-on-one on Skype. But that's down the road, and that's not what we're talking about right now. What I want to make sure that you're prepared for is that the one little thing that I'm giving you, the nugget, is going to work, okay? And that is what we're doing right now. I want you to have this work, and then I want you to be my biggest fan. So I love you guys. Thank you for connecting here. Super excited to have you. And so let's go here to the screener. I'm just going to literally smack that preset, and you're going to see the same stock show up that showed up before. And right here, I'm going to just select this stock. It doesn't matter. I'm just going to click one of them. So I want to show you by looking at CAI here. So we already saw in the other video how this is a pretty cool pattern. So I want to show you how that big bullish engulfing candle works. So if we go here, I'm going to show you so many examples that you're going to be like, what in the world? Okay, bullish engulfing candles look like this right there. It's that big candle. Let me see. Can you guys see this? Like, basically, it went from $8.88 up to $10.18. So that is a huge 20% move. Look at the little day next to it. And then the next day it crashed down. So in this case, it didn't hold. Well, all you had to do was see the follow through was holding. So that was your inside day right there, the one next to it. And then the next day, if it didn't go up in the morning, which it didn't, it started to go down, then you don't trade it because it's going down. Like, how easy is that? Like, basically, it's like just go the direction it goes. And this usually sets up the opportunity to go higher. Check out this massive bullish engulfing candle right here. And then the next little day is an inside day and it starts to go positive and you have this huge run. Look at that. Look at this one right here, right in this area. You've got some big, big candles. So that went from $8 to $9. So that's only a 10% move, but it extended out almost another dollar. Okay, so, almost another dollar. So that's almost another 10% move off of that massive candle. So don't ever ignore those candles. Try to go the direction they're going. If they go that direction, don't do it if it goes down the next morning. Does that make sense? Like, and it takes a little bit of practice, but once you start to see it, you'll understand. Like, look at this massive candle here and here. The next day, it gapped up, and then it fell back down. This one gapped up, kept holding, and went even bigger. So you just go the direction after it trades, whether it gives you an inside day. Like, if we zoom in here, look at this. If we zoom in here to this example, the stock went from $8.75 to $9.75. That's a 10% move. The next day, look at the pullback. You guys see that wick right there? If you look up here at the top left, you'll see high, low, close, open, and all these prices. Keep your eyeball on that L right there as I hover over this candle. The low of the day was $9.41, and the high of the day was $10.08. When I see a huge candle like this, the bullish engulfing one, and the next day it pulls back to about halfway, remember, like I talked about, a stock runs up, it pulls about halfway, and then it goes again. So on these bullish engulfing days, you look for a little pullback, and then if it starts to immediately bounce, you can trade it. So this started to follow through, and you would have had a great position. You could have put a stop in below the low of the day, which was only like, even if you missed it on that day, you could have still got in because it was closing strong. Does that make sense? Like, you can put your stop in pretty tight. And then look what happens. Boom, boom, boom. Well, look what happened here on Friday. A huge move accompanied by, look, huge volume. So the next day, which is Monday, Tuesday because it's Martin Luther King Day. The next day, it's probably going to create an inside day. And so if you look back to, what day is this? January 13th, 2017, on a chart, see what happened over the next few days. I will bet you that there was probably an upwards move that you could have caught in there, whether it was a day trade or a swing trade. Like, how cool is that? Okay? All those examples in one chart prove to you that big candles typically have follow through afterwards. Whether, you ready? Whether it's a day or a couple weeks, it may take some time, but remember, they most of the time have follow through. Now, check this out. So we're going to look at another one that I found on the screener. And I'm literally just going to pull whatever I see up. We're just going to take, let's take YRCW, because I just know that company. It's a trucking company, yellow trucking company. So you guys have probably seen them on the road. Look at this. Huge day. Let me zoom in right here. Let me zoom in right here. Look at this. I zoomed in all the way so you guys can see this. Huge day followed by an inside day. Remember that pullback we're looking for on the inside day to position ourselves? And then look what it does. It never went below that spot for the remainder 1, 2, 3, 4, 5, 6 days. That's a long time in trading. But look at the power of the follow through, especially if what? Look at all that volume. So guys, all you have to do is go out and try to find these huge days. I mean, this is a huge move. $10 all the way up to $11.84. 20% move. Most people would avoid this and be like, no way, I'm not trading this. Does that make sense? But the next day, look at the low of the day. If you look at the top left right here under L, and I hold my candle over that, it'll tell you what the low is, 11.87. And the next high, the low is 11.34 and the high was 11.87. All we're looking for is a little gain in order to position ourselves for the rest of the ride. I mean, you got to give it some time to work, especially if it starts to rally back like that. The next day it could try to shake you out. But for me, I might have gotten in there, like, let's say 11.50. I'm making this up, right? 11.50. And the next day I would have gotten out at 12. That's 50 cents. I didn't have to do anything for it. And it was going in the direction that I wanted it to go. All right, let's go to today's chart of the stock and look what's happening right now. Look at this. It's rallying hard on a big candle. 1362 up to 1463. That's a 10% move. And the volume is climbing. Don't you think there'll be like a follow-through move after everything that you've seen on this chart? Like, basically, I'm looking back at this chart and going, did it do this before? And I'm looking at that big candle and thinking tomorrow I would like to grab a dip on it and carry it forward. Does that make sense? Like, these charts are, this pattern is everywhere. Like, everywhere. So once you start to see that, the tricky part is following through and riding it up with it. Because a lot of times it whipsaw down and it'll buck you out. But don't let it buck you out. Just have a plan and be really careful. Like, look at this chart, right? Look at this day right here. I'm going to zoom in on this area right here. See how it had a big day and then it had that same little inside day and a little baby follow through. That's enough for me. That should be enough for you. 50 cents, you do that 10 times, that's a $5 move. 50 cents 10 times is a $5 move. You do it on 1,000 shares, it's $5,000. Okay? Does that make sense? Now, remember, I've got other stuff beyond this. Okay? If this is good for you, just learn it. Your goal is just to see what I'm seeing. See what other traders are seeing. And when I started seeing what other traders were seeing and basically was able to apply a ton of strategies to it that I have, things started to click. I was like, oh yeah, I can basically see a chart and go, that's probably going to move. So guys, remember that flag pattern that I was telling you about? See how that broke out right there? There's where the breakout happened. And you got a lot of volume coming through. You don't want to ignore those big moves because a lot of times they just kind of carry through. Now remember, how do you know if they're going to carry through? You don't. You have to watch it to see how it reacts. And as it starts to go up, it's going up. So then maybe it's time to get in for the ride. That's up to you. You have to figure that out for yourself and practice. But you're going to see these patterns everywhere. So this is it. I wanted to share all this really cool information with you that I see happen all the time. And this is just a very small glimpse into what is possible. So there you go, and I hope you enjoyed it.